I've been anticipating this day for quite a while. It's finally Fed Day. The Fed put out their first pseudo-hawkish statement in, God, I don't know how long. I guess since 2018. And so we're finally at the point where the Fed is acknowledging that inflation exists, and they are going to be doubling the speed of the taper. Some are calling it the turbo taper. I like that term. Instead of reducing bond purchases by $15 billion a month until they get down to $0 a month, they're going to be reducing it by $30 billion a month, which means that this is, the QE is going to be over pretty quick. It's really crept up on us. The Fed had been purchasing bonds at a rate of $120 billion per month. And what that means is that the Fed goes out into the open market and they buy I think it was $80 billion in treasuries and $40 billion in mortgage-backed securities. And so as they've been tapering these last 2 months, they've been reducing their purchases of treasuries by $10 billion a month and reducing their purchases of mortgage-backed securities by $5 billion a month. And the conventional wisdom would be that QE is supporting the bond market, helping keep interest rates low. And by extension, that's since they're also specifically targeting mortgage-backed securities, it's providing a lot of lift to the housing market. I'm not so sure about the mortgage-backed security thing, but at least in terms of treasuries, in the past, we've actually seen kind of a counterintuitive relationship between QE and bond yields. If I remember correctly, the last time that the Fed tapered QE, it was actually bullish for bonds. And I don't have a great way of explaining it, but I mean, you can kind of think of it as, even though I don't know if this is directly the issue at hand, QE is something that the stock market really likes. People who buy stocks, QE makes them feel good about themselves, and they feel like the Fed is doing something, and they want to go out and buy stocks. But when QE is waning, when QE is being tapered, the stock market gets a little queasy. And so you see a rotation out of stocks into bonds, which pushes down bond yields, despite the fact that, the Fed is removing what you would consider to be accommodation of $120 billion per month. And so, I mean, obviously we still have some time to go, but my guess would be that by March now, which is when the Fed is going to finish tapering QE, when QE is down to zero, and they're going to stop expanding the balance sheet, I would expect bond yields to be lower than they are today, not higher. Now, furthermore, the dot plot I thought was quite comical. So the Fed, okay, they doubled the speed of the taper. They're on pace to be done with QE by this March, which is, I mean, that's 1 quarter away. That's pretty darn fast. Actually, no, that's not 1 quarter away. I believe it's the start of March that they're going to be doing. So the end of February. We've got 2.5 months left of quantitative easing. That's it. And the Fed's dot plot, the median forecast is for 3 rate hikes in 2022, which is fantasy land. It's candy land. It's Rio Linda. I say it in every video. I will say it again. Jerome Powell is not going to raise interest rates. It's not going to happen. And to be honest, even if he tried, I have a feeling that interest rates in the real economy would probably go down. Now, that probably won't happen, but I'm saying I'm so sure that Powell's not going to raise rates and that he can't raise rates, that it's something that is incompatible with reality, that under no circumstances is that going to happen. 3 rate hikes would mean that the Fed is going to start hiking rates at the end of Q1 in April, okay? So we taper QE. We're at, 90 billion now. go to 60 billion in January, 30 billion in February, 0 in March, and then after 1 month of no QE, we get a rate hike. Did I say cut before? We're at 0, so I don't think Powell's going to go negative, but it's more likely that we get a rate cut in the next year than a rate hike. Okay? I might have to eat my hat later, but I'm going to say that. 1 month after the end of QE, this is not going to be a market where Powell is going to be even thinking about raising interest rates. It can't handle it. The last fundamental justification for rising prices in the stock market were the Trump tax cuts back in 2017. That's 4 years ago. The past 4 years of gains are built entirely on Powell's jawboning and his words and QE and, his dovishness. And so after all that, you think that Powell is going to raise interest rates by 75 basis points? That's insane. That could mean the end of America as we know it, which, as far as I'm concerned, that's not a bad thing. I want this asset bubble popped. But I know that Jerome Powell doesn't want that. Jerome Powell is the last person who wants that. And so you think that a 70 or 60-something-year-old man is just going to go and stick his finger in a light socket? Even if inflation continues, which it very well might do, and on the other hand, it might not. I've got an open mind. Consumer prices could go either way. I'm not talking about that today. But no matter which way they go, if stock prices are going down, Jerome Powell's not raising interest rates. He's not going to do it. If anything, he will either cancel the taper, because there's a possibility we don't even make it to the end of March or to the end of February, and restart QE, which I will go ahead and predict right now. Okay, we're a little early to be doing New Year's predictions, but since this is the last Powell press conference of 2021, by the end of 2022, QE will be restarted if it ever comes to an end. The only reason that Powell was able to even begin raising interest rates back in either 2017 or 2018, I guess it was 2017, or it had to have been, was because of the euphoria created by the Trump tax cuts and the idea that, for the first time in 8 years, we have a very, pro-business president. Obama was seen as not very, pro-business and all these things. This is stuff that you associate, typical narratives you associate with Republican presidencies. That was getting applied to Trump, and it created enough optimism in stocks that Powell could raise the Fed funds rate without encountering any immediate hiccups. But right now, everyone has been, on a razor's edge for a long time. And Powell has been the only force keeping them from jumping over the cliff. Now, I watched the press conference today. Powell, very clearly was trying to sound dovish. It's pretty typical playbook. If the statement is perceived as being, too hawkish, Powell will have to come in and dial that down, massage all of the journos in the press pool. And I have very low expectations for journalists, and I was happy to see, at least their questions were attacking Powell from the side of him being too dovish. From the hawkish side, they were saying, hey, Steve Leisman of all people. There were a lot of questions that people could have asked that they didn't know. But Leisman at least asked. He said, hey, there's a long and variable lag associated with monetary policy, and if you're not even, if you're still, sure, you're tapering QE faster than before, but if you're not ending QE entirely, aren't you still adding to the problem, of inflation? And if you don't stop QE until March, won't it be, a long and variable time from the end of March that we start to see any relief for these people who are suffering from inflation? I mean, that was by Steve Leisman's standards, that was a fantastic question. And Powell's answer was something like, oh, well, we live in the internet age now, and everyone reacts so quick, and so it's not going to take time for whatever my word is, is gospel, basically, or not. I mean, that's the wrong term, but he can speak things into existence. Was basically what Powell was saying. So Q1 of 2022 is going to be interesting. It's going to be real interesting. I wonder if we're going to make it through it. My guess is, like I said, I think that we're going to see a Powell flip-flop sometime over the next 3 months. The next Powell put is a matter of when, not if. How soon is Powell going to capitulate? How soon is he going to try and work up some new voodoo magic so that he can wave his magic wand and push the stock market back up to all-time highs? I mean, we got a little bit of a preview of it today. Powell came out. He spoke those sweet nothings, and magically stonks go up. But that's just today. I don't think that will last. At the end of the day, Powell is still doing the opposite of what markets really want, even if in the short term, some people are talking about inflation as a problem. These guys on Wall Street, they don't really think that. They won't think that. They only think that while they're doing well. They only think that when we're at all-time highs. But they won't be concerned with inflation when they see a 5% dip. Every 2% dip gets bought right now. People like that. They like that level of stability. It pretty much goes straight up. But if we get a 5% dip, which, is certainly, I think, that's a very reasonable, it's a very reasonable risk when you're talking about a period in which the Fed is actively tapering QE. We could see as much as a 10% tip, but we will not see more than that before Powell flip-flops. I do not see him allowing a 20% drop again before flip-flopping. So let's cross that bridge when we come to it. With that said, I will see you folks back here tomorrow.